Ladies and gentlemen, welcome back to the channel. Tesla stock at the time of recording this video is down about 0.25%. It looks like you're getting a little bit of coiling on the charts before we get a larger breakout from here. Now, in today's episode, we're going to be going over all of your breaking news that you need to know, and there's quite a bit of it. Now, we're also going to talk about what's happening in the broader markets today because there's some very weird things that are happening, like silver and gold that are plummeting, 10-year treasury yields that are declining, and stocks generally declining as well. When you add all of this together, it doesn't make a whole lot of sense, but there could be some possible explanations. And we will talk about that in today's episode. You know, I actually woke up this morning. I'm like, silver and gold. Gold was down like 3%. Silver was down 7%. I'm like, oh, that don't look great. And then I look at stocks, and stocks are selling off. And I'm like, oh, that don't look great. And then I look at 10-year treasury yields, and they're selling off. Oil's down like 1% as well. Certain assets mean certain things. And there's a very weird situation playing out today. We'll get into it. Ladies and gentlemen, hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode. We are planting the seeds of future fortunes. Yes, we are going out and buying AI, software, gene editing, biopharmas, robotics, quantum stocks, energy stocks, if I missed that category. For the next 10 plus years, we want to get in on the stocks that Wall Street is overlooking. The, 500 million to 3 billion market cap range is primed for this because those companies are just too small for a lot of Wall Street to pay attention to. And that's where a lot of the opportunities are. The doubles, the potential 5, 10xers. The Palantirs at $10, if you will. Nobody thought Palantir was going to be the company that it is today because it was largely a smaller company then. And people didn't pay as much attention to it. To point out one example, we're going out and finding those stocks. So if you guys want to come join us, check that link out down below, and let's get into today's episode. First things first, with your Tesla stock breaking news. Kathy Wood says that retail investors will likely secure Elon Musk's new Tesla Pay package despite the ISS opposition. She notes Tesla shareholder votes have always passed decisively and believes history will repeat itself again. This is a big risk, okay? If the vote, for whatever reason, does not pass, you're looking at significant downside for Tesla stock. If the vote does pass, in which that is the most likely presumable outcome, then that could bring significant upside for the stock. So November 6th is going to be a massive catalyst, and I expect that the stock is probably going to see some upside volatility, hence a breakout into November 6th. I think Wall Street is probably going to price in the package is going to be passed versus not. Now, there's a lot of upcoming catalysts as well, including earnings coming out tomorrow, in which we're going to cover that extensively in the video coming out at 8 p.m. tonight, because that's going to be the last video at 8 p.m. tonight before earnings come out. The next video you're going to see on this channel is probably going to come out at about 5 p.m. or so tomorrow, covering the earnings, covering the shareholder deck that we get, and then obviously we'll cover the earnings call and the commentary following that as well on this channel. But the video at 8 p.m. tonight is the last video before Tesla earnings, so you definitely don't want to miss that one, okay? But Gary Black writes on X, quote, in a sign of continuing strong demand, Tesla China reported 16.5 thousand insured registrations for the week of October 13th to the 19th. This was the highest third week of a quarter ever and the highest week of the quarter so far. After 3 weeks, the fourth quarter is up 20.7% quarter over quarter and up 39.6% year over year. So again, this is something I've talked about for a while now, but Wall Street throughout Q3 had this expectation that Q3 was going to be really strong because of the tax credit expiring and the pull forward of demand, but that Q4 was going to be really bad. Tesla launched the Model Y L, which by all the metrics we could look at, seemed like it was going to be a very successful product in China, at the very least. Now, Q4 is Tesla's organically the best quarter, so I was under the assumption that Q4 was probably setting up to be stronger than most people thought. And so far, what we're getting out of China is showing that. There's strong demand in China, which is Tesla's largest market by country. So if things are strong in China, that potentially could offset a little bit of a decline in America and give you a very strong Q4, which seems to be how we are setting up. Now, although Tesla stock doesn't care as much about deliveries anymore, like that's not the big catalyst that's going to, crash Tesla or skyrocket the stock, it is something you like to see, right? You want to see good deliveries when all things are said and done. Now, Elon Musk said on X in the last couple of hours that Tesla's FSD will get 10x smarter just from software updates. He says that humans can't compete with computers. Elite Options Trader on X wrote this post about Tesla that has 34,000 views. He says all eyes on earnings this Wednesday, $500 possible in November. Tesla has been basing above $400 the last month ever since breaking above the key $363 level. Every dip near 400 gets bought up quickly, showing accumulation before earnings. If earnings are stellar, this should trigger the next leg higher on Tesla, pushing us to new all-time highs. Future growth outlook, autonomy and robotaxi. Potential 2025 launch could add an entirely new recurring revenue vertical. Energy division expansion. Megapack deployments and energy storage is scaling faster than expected, driving margin stability. AI and Dojo compute. Training power expansion positions Tesla as a long-term AI infrastructure player beyond vehicles. The next-gen vehicle sub-$30,000 model in development aims to dominate the mass-market EV segment globally, and then global manufacturing, with Giga Mexico and India discussions hinting at multi-year production and cost-scaling runway, with earnings scenarios, bull case revenue, $25 billion, plus EPS at 70 cents plus. Base case, $26.3 billion in revenue, EPS at 54 cents, which is right in line with kind of what Wall Street is expecting as well, with a bear case of sub $25 billion in revenue and 35 cents of EPS. Now, again, we know what's going to move Tesla is not the numbers themselves. Anyone that says the numbers will move Tesla doesn't know shit about Tesla stock, okay? What's going to move Tesla is Tesla's kind of guidance around 2026, right? Wall Street is no longer paying attention to 2025. The attention is rapidly going to shift towards 2026. And what does Tesla say about robotaxi deployments? How many cities is Tesla targeting for robotaxi operations next year? That's catalyst number one. Catalyst number two is, does Tesla continue to kind of tell us that Optimus is on track to start some kind of piloted sales in 2026, right? If we get disappointments on either one of those kind of metrics, that's where the downside comes in for Tesla. If, as I believe to be true, Tesla kind of reaffirms all of that, maybe, a couple dozen cities next year getting robotaxi, something like that, and Optimus piloted kind of sales. This is not really like mass production. This would be something like Tesla produces 100 robots for Coca-Cola, right? Tesla produces 100 robots for DHT or something, right? And they start working in these factory kind of roles, right? That's what we're talking about, like a piloted production, not necessarily making as many robots as possible, but sending out batches to see what works, what doesn't work, but actually generating some sales from that. That's really my base case expectation for what we're going to hear on earnings, something like that. The focus is going to be on 2026. Now, Tesla did say they're going to update their full year guidance this quarter. So we'll see what they say about that. I think Tesla's probably going to forecast a pretty strong Q4, and that could be an upside catalyst as well from a, again, delivery perspective, because Wall Street is so off sides here. They're expecting a really weak Q4, and Tesla's probably going to come out and say, yeah, we're going to have a strong Q4. Like something like that. Okay. So that in a nutshell are some of the key catalysts that will push Tesla stock higher in my view. Now, as we've talked about on this channel for the last couple of days now, Tesla is above the 20-day moving average. Now, really, once you get above the 20-day moving average, there can be a consolidation period, but historically speaking, you're looking at some pretty large upside at this point. Okay, especially if you trade sideways and don't start to trend lower, because for rare instances, right, you can break above the 20-day moving average, go up a little bit, come right back down, go up, come down. It can be a little volatile around that 20-day moving average, but when you go up and kind of consolidate and base out, you normally tend to see a pretty explosive rally higher. Okay, well, that's where we are now. You broke above the 20-day moving average. You're kind of what looks like in a, basing pattern and getting ready for that next leg of upside, which will likely push Tesla into the 500s, right? And once you hit new all-time highs, I think the chase is on, because what is interesting about this time around is it seems like a lot of institutions are the ones that are bullish on Tesla, whereas before, like almost every other rally before, it was retail that was bullish on Tesla, that was buying and accumulating positions in Tesla, and then kind of Wall Street caught on and then started to chase the stock. This time around, it's a little bit flip-flopped, okay? You can see institutional option activity has been very bullish in Tesla now for the last couple of days, including today. You have 71 different trades totaling $65 million with a positive order value of 80%. So another really good day as far as options are concerned. Now with the short position, there's 77 million shares sold short, 2.74% short interest of free float, and it looks like about 81,000 shares that are on net being sold short today. So 77 million shares sold short, less than 3% short interest does not sound like a lot, but for an example, on October 9th, there was 69 million shares that traded hands in volume. On October 13th, there was 79 million shares in volume. On October 14th, there was 72.5 million shares in volume. The next day, October 15th, there was 71.5 million shares for volume. So the amount of shares sold short is greater than most days of volume, right? Most single days of volume, or pretty comparable to that. So what do you think happens if we get, let's say, blowout earnings and 10 million shares want to cover? That's going to drive significant upside from here. And I think that's when, again, you're going to start to see a chase, right? Tesla, from a technical perspective, looks really damn good here. So I think you want to make up your decision now, whether you want to get into this trade for a short-term kind of thing, or if you're going to sit this one out, because you don't want to be the one that's chasing, right? And I think a lot of retail investors are going to chase Tesla, and the signs are here for the next leg higher. Now, Peter DiCarlo on X shared this post about Tesla as well, and about another breakout. This post has 56,000 views on X. He says Tesla earnings Wednesday, and I'm pricing in a 10 to 20% upside move. Now, the options market is pricing in about 8% up or down. 8% up, last we checked, puts you at what, like 500? Something like that, pretty close to 500. 8% up puts you at about $485. 8% downside puts you at about $412. Okay, so that's the range that the options market is pricing in. So just so you guys know, if you're buying call options on Tesla expiring this Friday, if the options market's pricing in 8%, the odds are basically that you have to see Tesla above $485 to make money on those options. Those are the at the money options. So if you're going further out, you need to see an even larger upside surprise from there. And basically how it works is market makers, they take the back end of these options. So if you're pricing an 8%, but you get a 20% move, you start a bit of a gamma squeeze on that, let alone the chase that could follow, because market makers have to go out and start buying a ton of stock as as Tesla breaks above, let's say 490 or 500, and then they have to start, buying more and more stock the higher the stock goes, and that's where you get into a gamma squeeze, and then potentially you see the chasers start to get on the stock and they start to buy more options, which forces the market makers to keep buying more and more shares. Okay, that is what a gamma squeeze is. Now, it says here, since the massive rally we called in September, Tesla has been compressing for 2 months straight, holding firm above the 420 liquidity zone the entire time. That's key. It means bulls still control both short and long-term structure, and that's a very bullish sign. With the options flow over the past 45 days, we've seen $100 million plus in confirmed call options hit the tape. When you see that kind of size, it's rarely random. It's often smart money positioning early. Most of these calls expire in 2026 and 2027, suggesting long-term conviction. They're buying now, not waiting until after earnings. And then obviously he mentions the insider confidence with Elon that bought $1 billion worth of stock. And he suggests that the downside risk is at about $420. If we break that accumulation zone, you could fall towards $360 pretty quickly. The upside would be about $540 per share, a 2 standard deviation band, and aligns perfectly with our end of the year target range of 500 to 550. And honestly, if things go right, if this does divulge into some kind of, gamma slash, short squeeze, you could see Tesla in the 600s, right? Because Wall Street has really overlooked Tesla's AI and robotics opportunities for a very long time. If that starts to catch on and people start to actually, think about that and model that into Tesla, the upside could be pretty dramatic. Now, FSD v14.1.3 has officially started rolling out to the general public. Tesla has lowered lease pricing by up to 23% in the US, with new starting lease prices for the Model 3 at $329 a month, down from $429. That's a 23% drop. The Model Y is now at $449 a month from $529, a 15% drop. The Cybertruck is now at $699 a month, down from $749 a month. That is a 7% drop. Now, according to a new report, Tesla is looking to conduct FSD tests in a new Swedish city. The proposal appears to have been received rather positively by one of Karlstad's officials. Now, Kia and Tesla are top of the list in a Swedish study of strongest EV batteries. KVBIL initiated a test of 1,300 used BEVs and PHEVs to determine which models retain the best battery capacity over time. The Kia EV6 e-Nitro and the Tesla Model Y were the best. Now, we do have some earnings today in after hours. Now, I will mention the earnings this morning, specifically like Coca-Cola. While they did say there is some stress in the consumer, earnings have come in great so far. And that's my expectation broadly for Q3. There is zero signs that we should be concerned of earnings coming in bad or a disappointment or anything like that, right? There's just no reason to think that at this point. Now, we do have some earnings today and after hours as well, with Netflix, Intuitive Surgical, Texas Instruments, Capital One, Mattel, and some other banks. Tomorrow, pre-market, Amphenol, GE Vernova, Vertiv, Boston Scientific, Hilton, AT&T, and Thermo Fisher Scientific. You do have some more energy data center names like GE Vernova. They make, like batteries, stationary batteries. Vertiv, like cooling elements in data centers, right? And then you have Hilton. Hilton is one of those companies, or even, Capital One, for an example. It's going to tell you a little bit more about consumers and how they're doing and spending patterns, right? We did hear from American Express, which had good things to say about the consumer. So as long as Capital One reiterates that, Hilton says things are going okay. That's a good sign. Because we're not getting economic data, the best thing that we really have right now is what are companies saying about the consumer? That's all we really have. Now, again, Wednesday and after hours, Tesla, IBM, Kinder Morgan, QuantumScape, SAP, Alcoa, and Lam Research. Again, more of kind of that AI trade Wednesday and after hours. Thursday, pre-market, American Airlines, Honeywell, Dow, Hasbro, Nokia, Southwest, AutoNation, and T-Mobile. And then Thursday and after hours, Intel, Newmont, Alaska Airlines, Deckers Brands, Boyd, and Ford. And then Friday, pre-market, P&G, Booz Allen, Hamilton, and some others. So big week of earnings, but really next week is the pinnacle of Q3 earnings when you're going to get your big tech names. And then after that, you start to get some smaller cap companies in the following weeks. And then you really conclude earnings with NVIDIA. But I have no reason to think earnings are going to come in bad. Now, here's the kicker. This earnings season for Q3, you have the highest expectations that we've seen since 2021. So basically, I mean, everyone's pretty bullish on this quarter's earnings. So it's going to be a little bit harder than in other quarters to impress. For an example, last quarter, the year-over-year EPS estimates were up 4%. So people were expecting 4% year-over-year earnings growth. We came in at over 11% year-over-year earnings growth. That is partially why stocks have continued to do well. Well, now this year, you're expecting like 6% year-over-year earnings growth. That's the highest expectation. Now, if you come in at 8% year-over-year earnings growth, that doesn't look as good, right? You need to really, continue to impress on earnings from that perspective. Now, again, in the broader markets today, we had some weird shit happen, okay? Today was a very strange day. Gold down 4.66%. Silver down 6.5%. Platinum, palladium, down well over 6% each. Oil is now up 0.33%. Earlier today, it was down about 1%. 10-year treasury yields are down about 3 basis points to 3.961%. Okay. Stocks were generally trading lower. Seems like they are now starting to recover. So in the morning today, it was really weird, okay? Because silver and gold, what are they? Why have they been doing well? Well, there's the crowd that wants to get away from the US dollar, okay? So that's part of it, and that complicates things a little bit. But generally speaking, silver and gold are seen as inflation hedges. So the higher gold was going, the more concerned you would say the markets are about inflation. Now, oil was down about 1%. So at that point, it's like, okay, that makes sense. People were maybe expecting a good CPI report this Friday. Gold, silver selling off, oil falling, right? Even now it's up 0.33%. That's not like a surge in oil, right? So lower oil prices are basically a sign of weaker demand, right? Because oil is a function of really supply and demand on a global level. If oil is high, that means that the economies are doing well, okay? If oil is falling, that means economies are not doing as well. Well, if economies are not doing as well, inflation cannot thrive in that environment. Inflation cannot thrive if consumers and the economy are doing poorly. So both of these things kind of suggested that maybe we're going to get a really low CPI report on Friday. Well, stocks had been, selling off. The Russell was down over 1% about an hour ago. Now, it's only down 0.06%. That was a little strange because if we're expecting a good CPI report on Friday and markets were pricing that in, wouldn't stocks be trading higher on that? Wouldn't the Russell be trading higher on that? You would think, but that's not what was happening, okay? Now, something I've talked about on this channel for a while now, ever since the government confirmed that they're going to be putting out the CPI report on Friday because of, quote-unquote, a Social Security adjustment, okay? That's BS. I think the administration is putting out this CPI report on Friday because the numbers are going to be good, right? That's it. That's why. The government, Trump is not incentivized to put out a bad CPI report as the first set of BLS data coming out since the government shutdown if it's going to be a bad report, right? They're not incentivized to do that. They don't have to do that. They could just not put out the CPI report and blame it on the government shutdown. But the fact that they are putting out the CPI report, Trump is like, okay, put out the CPI report. To me, it suggests that inflation is probably going to come in lower than expected. Here's the good news if you are an equity investor. Core CPI month over month is expected at 0.3%. That's pretty high because, again, last month was 0.3%, so that's not expecting an improvement. Same for core year over year, expected at 3.1%, unchanged from last year at 3.1%. Headline inflation is expected at 0.4%, unchanged from last month. And headline year over year inflation expected at 3.1%. That's actually higher than last month's 2.9%. So, again, judging off of the silver and gold collapse today, you could either throw it in two buckets, in my personal opinion. You could say that it's just a liquidation. And at one point in the morning with the Russell that was down so much, with a lot of areas of this market that were selling off, it did kind of look like just a liquidation, okay? More likely than not at this point, with the recovery in stocks, it's starting to look like maybe the first pricing in of what could be a good CPI report on Friday. Now, there's still a couple of days before Friday, so we will see how stocks react. But if you've been in the markets for a long time, you know that big money tends to get the CPI reports early, right? For an example, the Fed knows what the CPI report's going to look like. Trump knows what the CPI report is already going to look like. Staff members at the BLS already know what the CPI report is going to look like. Well, take a Citadel or a BlackRock or a Vanguard or someone like that. They know people in the Trump administration. They know the people at the BLS. They know the people at the Fed that know the CPI report. So the odds are probably good that the market makers, the people that literally help the market stay liquid, have a pretty good idea of the CPI report. So if they have a pretty good idea of the CPI report, wouldn't that make sense? If Treasury yields are down 3 basis points today, if gold is down 5% today and silver's down 6.5% and these other precious metals are down a similar amount, wouldn't that make sense that they are front running a good CPI report and selling gold and silver, buying bonds? Because if yields are falling, that means investors are buying bonds. Bonds work like a dividend stock, right? If you have a $100 bond and that pays you, let's say, $5 a year, that would be a 5% yielding coupon, stock, bond, whatever it is, right? If people go out and start buying that stock and now the stock is $200, that yield is now 2.5%. Okay, same is true for bonds, right? As bond prices go up, the yields come down. Okay, if people start to sell the bonds and drive the price lower, then the yield goes up, right? It works just like a fixed dividend stock. Okay, this to me looks like a little bit of front running for the CPI report. Now, we'll see in the coming days what happens to gold and silver. Gold and silver has been on a bit of just a face ripper rally recently. So is it theoretically possible that this is just kind of a liquidation because we've seen such a strong rally over the past year? That's possible, right? I mean, gold is up almost $1,000 per ounce since August of 2025, like 2 months ago, okay? Gold and silver have both been on a face ripper rally. I've literally had people come up to me because they know I'm, invested in stocks and markets and all this and say, hey, is it a good time to buy silver? For whatever reason, people like silver more than gold. And I'm like, I would probably wait until it comes down a little bit, right? That's what I've told people. So yeah, there was definitely a little bit of craziness in silver and gold, but with the CPI report coming out on Friday, you could perhaps make the argument that the CPI report was leaked to, again, not retail investors, like big money, right? Because you can also make an argument that you would want the market makers to have an idea of a volatile data set like CPI. What if the CPI report came in negative on Friday? What if the CPI report showed inflation is collapsing? Well, that obviously has implications for the economy, because if inflation is collapsing, then maybe the economy is collapsing. That's not necessarily great for stocks. And I don't know how positive of a reaction you'd see in the markets. But wouldn't you want the market makers, if you're Trump or Jay Powell or anyone like that, to have an idea of what the CPI report was going to come in as, so they're not caught offside, so there's not extra selling or volatility when you maybe could prevent that? That would make sense, right? So while I can't prove that the CPI report was leaked, if you think about these things logically, sell off in gold and silver, sell down in bonds, slight bid in stocks as of now. Again, there's a couple days before now and Friday. You can make an argument that maybe the CPI report was leaked to the big guys. Let me know your thoughts on that down below in the comment section, because that's the only thing that makes even remote sense to why gold is down 5% in a day. Silver is down 6.5%. Now, the CNN Fear and Greed Index today is sitting at 30. That is unchanged from yesterday's close. Market momentum is neutral. Stock price strength is fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand is extreme fear. Junk bond demand currently in extreme fear. Again, just like the AI Investor Sentiment Survey, we will get a new one this Thursday. But the last one we had on last Thursday, on October 15th, showed 33.7% bullish investors, neutral investors at 20.3%, and bearish investors at 46.1%. I show you guys the CNN Fear and Greed Index. I show you the AI Investor Sentiment Survey. Again, not because there's a lot of bears and that means the bears are right and stocks are going to fall. It's the opposite. When the CNN Fear and Greed Index is bearish, when AI Investor Sentiment Survey, the AI Investor Sentiment Survey, is this bearish, it is a green light to be buying stocks, essentially. Unless you think some kind of recession is coming or broader problem, you would want to be buying when these things are bearish. Same is true for the percent of stocks trading above their 50-day moving average. It is unchanged from yesterday, sitting at 47.6%. So over 50%, 52.5% of stocks are still in an active decline. And that's not really changing today. So when you have these bearish market metrics to look at, it's typically a good buying opportunity. You can also point towards the S&P and the RSI. Okay, when you look at the S&P's RSI, it recently hit a low of 42. Okay, that is the lowest the RSI had been since you were coming out of the recovery from the April crash. So the RSI before, when you got these knee-jerk kind of sell-offs, like right here on August 1st, S&P was down 1.64%. It was a buying opportunity. Stocks recovered. Here, S&P was down 0.74%. RSI sharply, shot lower. These were both buying opportunities. And, that looks to be the same setup that we have right now. So let me know your thoughts on all of this down below in the comment section. If you have not done so already, hit the like button and subscribe to the channel. It's free 99 to do so, costs you absolutely nothing. But also check out that link down below in the description of this video if you want to come find, identify, and execute investing strategies in small cap AI, energy, robotics, biopharmas. You get the idea. These are core themes in the bull market for the next 10 plus years. We are going out, finding, spotting, identifying, and executing on the opportunities that Wall Street is overlooking. They're just overlooking these stocks. And I think as we get rate cuts, as the economy improves, as inflation goes down, as pro-business policies really start kicking in and going into effect next year, this is the area that has the most opportunity, that has the best risk to reward. Sure, is it going to be volatile? Could you lose 20% in a day? Yes. Could you gain 100% in a day? Yes, and I think picking and choosing the good quality names with this strategy is the best, again, risk to reward in markets right now. So again, that link is down below. If you guys want to sign up with Public, deposit $1,000, get $100 in your choice in free stock, and buy a couple shares of your favorite stock on Public's dime. Check that link out down below. That is the brokerage that I personally use the most. My favorite brokerage right now, by far. So yeah, that is it. Have a great rest of your day, and I will see you in the next one.